Happy Monday, everyone. Let's go ahead and jump right into this weekly outlook. So let's go ahead and start off with some geopolitical news first. What we have here is Biden providing more support, pledging to provide more support to Ukraine here. So as you guys know, from the beginning of the year until now, we still have this Russia-Ukraine war going on, just this back and forth that's happening. And at the forefront of it, we've had UK and the US providing support to Ukraine in order for Ukraine to continue defending itself. And so, in a lot of the recent packages as well that Biden has signed, a lot of the new bills that Biden has signed, actually, you've seen packages to support Ukraine. Billions of dollars have been provided in order to support Ukraine with monetary packages, and then also with military defense, whatever Ukraine needs in order to defend itself, the US has been providing that. And so with this, we're starting to see, the tensions just continue to escalate between Russia and Ukraine. And then also on the other hand, you have in the background, as US is supporting Ukraine, you also have China involved in it indirectly as well. You have the UK involved in it indirectly as well. You have a lot of different countries are essentially involved in this, supporting one side or the other. And so we also saw that there's continued tensions between US and China. Of course, it's been for the longest time for different reasons. And then now we also have US, China, and Taiwan tensions in the background. So that's also very important to watch out for. But as you continue down into this article, you're going to continue to see more details about these Russian airstrikes, and then also just the continuation and escalation of these tensions. When you continue down, you see UK Prime Minister Truss is trying to urge leaders of G7 to not waver in their support for Ukraine. US is pretty much stepping in and still trying to help Ukraine. So you're going to see a lot of details when you continue down into this article that you can go back and read. But that was pretty much the summary of this. This is also just supporting that risk-off sentiment that we have seen in the financial markets very recently, where a lot of investors, they're moving away from equities and they're sitting on the sidelines. That's not to say that they're rushing into commodities or they're rushing into safe haven assets, not just yet, but they're more on the sidelines. But they're not into, risk on sentiment just yet. They're more on the risk off still, and they're still not moving into equities. They're not just flooding into equities or anything like that at the moment. But that is also why when you look at the technical analysis for any pair asset, whatever that you're trading, you're going to see that we're sitting at pretty key levels for majority of the pairs in general. Now, moving into what's happening in Europe, a lot of these member states of EU were against this EU debt that was, being talked about, a potential issuance of EU debt to kind of cushion, what's happening with the energy crisis and the rising prices because of the energy crisis. But eventually, again, same thing as you continue down into this article. Here's the title of it. You can look it up. But to give you guys a quick summary, as you continue down, you're going to start to see how this transition happened, where Germany is now supporting this EU debt. And again, the reason for this is because they are trying to raise money. So one way to kind of raise money is, again, you issue debt, and that essentially means like bonds and things like that. So bond is a debt. So you issue debt in order to raise money, and then you're going to disperse those money. You're going to distribute that money to the struggling member states. And all of this is for winter because they have been cut off. All of EU has been cut off from Russian gas, and they're trying to transition into alternative energy supplies. But again, you cannot, right off the bat in just a matter of a couple of months, replace, the huge chunk of gas that you've been getting from Russia. So in order to do that, obviously it's going to take time, and you're moving into winter now. Your supply is very low. The demand is high. Obviously the prices are soaring here for energy, and that's why they're issuing debt in order to kind of cushion that blow, just to raise more money, which they're going to distribute to their member states who are struggling heavily here. And then let's go ahead and move on to the economic calendar and then move on to the technical analysis. So this week we started off quite easy. We had a bank holiday with Japan and Asian session yesterday. And then we have the US bank holiday that happened this morning, Columbus Day. And then today we kickstarted the IMF meetings, which is going to be very important, especially for the UK, because the IMF has concerns about what recently happened with Bank of England providing liquidity into the financial markets with their temporary bond purchasing program. And the reason why there's concerns around that is because on one hand, Bank of England is increasing interest rates and moving into contractionary monetary policies, which in return is to really contract the money supply in an economy. And then on the other hand, as the liquidity is obviously going to dry up when you contract money supply in an economy, they're trying to provide more liquidity into the financial markets, because the finance side of the finance sector of the economy is starting to get concerned about the liquidity drying up, which is eventually, obviously not a good thing as you're moving into a recession. So there's concerns around that. So we're going to have Bank of England governor speaking tomorrow in Washington, D.C. about this. And then we're also going to have the chancellor speaking as well from the UK and trying to provide an explanation of why are they doing these two things together, increasing interest rates and then also providing liquidity into the financial markets. And the concern here is, will IMF have to eventually bail out UK? Is it going to get to that point? That's what the main concern of IMF is. And IMF is an international organization which is responsible for global financial stability and economies, right? And so that's why they play a key role of what's going on, and that's why these meetings are so important. These meetings are going to happen, the entire week. So tomorrow we have day 2, where Bank of England governor is going to be speaking. We also have some FOMC members as well, some MPC members. And then as you continue down, you got GDP data coming out in pre-London session, so this is going to be very important. We're starting to see that they're expecting GDP to slow down here. This essentially just means that they're not expecting a change from 0.2%. They're expecting it to be the same. If you want to see a change, obviously you're going to see a positive change would be somewhere around 0.1% or higher. And then if you come back into the negatives, then obviously you'd be expecting negative percentage here. Right. So what this number essentially means is that they're not expecting a change in GDP, which is 0.2%. And then as you can see, there's a ton of low impact data coming out as well. So as soon as London opens up on Wednesday, expect a little bit of volatility as the market starts to price all this stuff in. Then going into Wednesday, that's really when New York session volume is going to start kicking in a lot more from a fundamental perspective, because this is where PPI comes out. This is important because this is inflation of finished goods and services by producers. So inflation at a producer level. If you start to see more inflation here, increasing of inflation, then eventually this gets trickled down to the retail side, and then that gets trickled down to the consumer side. If the producers have to pay more for their raw materials, for their labor, for their equipment, this entire process in order to finish a product, and then they're obviously going to increase some prices and they're going to sell that off to the retail side. The retail side is going to increase the price on that particular product or service, and then they're going to go ahead and sell that to the consumers. That's really how you make profit in business, right? You're not going to sell it for the same price that you got it for. You won't be making any profit. So depending on what the inflation data is here, we were sitting at negative 0.1% last time, which is a good thing because that means that the inflation was slowly kind of decreasing a little bit. But overall, like August was obviously the biggest drop that happened compared to July and everything else before that in 2022. But then we start to see that inflation was still kind of increasing, but they were still around the negative numbers. And now we're expecting inflation on the producers level to increase, to 0.2%, which is obviously not a good thing because that means that all of this is going to get trickled down to the consumers very soon in the next couple of months, which goes ahead and feeds even more into the 75 basis point hike sentiment that we have for the Fed in November. I believe it's the November 2nd or 3rd is when interest rates from the US will be coming out. So with all of that, also when you look at what happened today where FOMC, let's continue back up here. When you had the FOMC member here speaking, she's the vice chair of the Federal Reserve. She said, let me actually continue back here, right here. So she said that the actual policy path will be data dependent, but the Fed will continue to raise rates and become more restrictive. That essentially means that they're going to continue moving into contractionary monetary policies and that they're going to continue increasing interest rates, even going into next year. So all of this is very important. If you start to see PPI increasing, obviously you're going to see that being reflected into CPI, which is the next most important thing for the Fed, because if CPI here increases, then that means that inflation is increasing. That means that the Fed is going to continue having to increase interest rates at a much higher level. And then you're going to start to see inflation eventually decreasing back down once we're at high enough interest rate levels. In order for you to really control inflation and inflation to slow back down, you need interest rates close to, if not at the same level as inflation. So here, as you can see, the last inflation was sitting at 8.3%. They're expecting it to come back down to 8.1%, but obviously if CPI continues to increase at a month to month, then obviously you're going to start to see the CPI of year to year also increasing as well. And if that happens, then obviously that means you need even more aggressive hikes and you need even more restrictive policies. So again, Wednesday is going to be very important for the US with PPI coming out. Continue down day 3 of IMF meetings, and then you have FOMC members speaking here again. You have the FOMC meeting minutes, which is also very important. It is, essentially a summary of what happened at the FOMC meeting, so the interest rate press conference and all that stuff. But this is going to give you a much detailed view of what to expect of an economic outlook, what is the Fed essentially doing, and what can we expect them to continue doing going into the next year or so. After that, Thursday is CPI again, very important. And then you got the G20 meeting. You also have the IMF meeting going on as well. Let's go ahead and continue down into Friday. That's when you have core retail sales coming out from the US. You also have the consumer sentiment coming out and the inflation expectations. And then Saturday is the day 6 of IMF meeting. So as you can see, the IMF meetings will continue the entire week. And we're going to keep watching very closely what they are saying, if there's any comments coming out about, what's essentially going on. And that's going to give us a good understanding, essentially, from a global financial perspective as well. Now, let's go ahead and move on to the technical side. So let's start off with gold. I'm going to start off with the quarterly time frame just so you guys can get a good view of it. If you don't have the quarterly time frame, again, don't worry about it. That's why I'm showing it to you. So let's go ahead and mark off the support that price is sitting at. I'm going to do 1655 flat. And then I'm also going to mark off this support area right here that we've rejected into and then pull back down, which is, let's just call it 1710 right there. So these are 2 areas I'm going to mark off on the quarterly, drop down to the monthly time frame. As you can see, that's the heavy sell-off that we've had with the news about Fed increasing interest rates, the market already pricing in with what's happening with Russia and Ukraine. And then also the most important thing here is, the Fed, what's happening with the Fed. And as they continue the sentiment of they're going to continue increasing interest rates, eventually that leads to the point of, okay, we're coming back down and we're going to control inflation essentially here. Just continue increasing interest rates. So this is the next target. If we can continue breaking below 1655, then we come back down into 1615 area and then eventually come back down into these 1500, high 1500 levels. That's what the next area of target is going to be. But currently we are sitting in a liquidity area, and let me mark that off for you guys right here. And the reason why that this is a liquidity area is because every time price comes close to this or taps into this area, you can see that there's a ton of volume that tends to follow, right? You have a lot of good examples here when you look to the left, where you have price coming back down into this zone, it rejects into this zone, and then pulls back and closes into this area. This next wick comes back into this area, pushes back up, and we come back into these close to 1800 area, 1755 or so. And then same thing, we come back into this level here, reject this, and continue pushing back up. And then that's where we end up closing off before selling back down into this area once again. Same thing here, where price is holding onto this area as resistance, and then you see that push back down with this nice volume candle until we get a nice break and retest and then push back down. And this is really when this economic recovery started back in 2013. And as you can see, we're following quite a similar path right now as well. So if I just zoom this out, you can see how similar these movements are, where we come back and we grab more liquidity, and then you start to see these nice sell-offs. And that's the same exact thing that happened here when the Fed continued to increase those interest rates. And that's when we really got, inflation under control. I don't really expect price to continue just dumping down until the end of the year. Nothing like that, because we have a long way to go until we actually start seeing a dent in inflation at all. Let's go ahead and drop down to the weekly time frame. So here we're still continuing this nice bearish trend here, as you can see. So from up top here, still pushing down. We've come back up into the 1700 mark, rejected this a few times, as you can see in the past. This is again another important area. A lot of consolidation, a nice bottom wick rejection, and then the following weekly candle has no bottom wick whatsoever right here on this candle, but we push right back up into these highs. This is also in 2020, COVID, all of that was a catalyst, but from a technical level, as you can see, it was a very important level. We come back into 2021, tap into this area, same thing, a nice bullish momentum to come back into this 1900 mark here, grab liquidity, continue pushing back down, reject this area once again, and then all of rest of 2021, half of 2021, we ended up just consolidating out around these areas before a push back up, and this is really when we started to see those tensions between Russia and Ukraine. Market priced that in here in the next couple of weeks, and then the news started coming out about the Fed increasing interest rates, and that's when we really started to see this entire pushback down happen. But obviously from a technical level, we've always come back and respected structure, and that's essentially what we're doing. So in order for us to look for any continued sell opportunities, we need price to continue breaking below this 1655 area, and then you have all these nice sells that you can come back and come back into 1615 that you can catch going all the way down into 1580. If price just ends up holding onto a support here and flips back up to continue pushing back up, then you have potential buys above 1710, so 1700 to 1710. But again, you want to line this up with fundamentals given that you are sitting at very key levels. So from a fundamental perspective, you got FOMC meetings coming out, you also meeting minutes, and then you also have PPI and CPI coming out this week. So that's really what the markets will be getting ready for. And we already are ever since the market opened up this week, right? So again, you got this entire bearish trend here once again confirmed on the daily time frame. So a nice bearish trend, come back up here last week and then reject into this area and then finally start this bearish trend coming back down. As you can see on the daily time frame, this is your 1680 mark, which we know is a very key area, right? Where price consolidated out before. And then that's the same exact area that we're in right now. Even though this daily candle just started forming a couple of hours ago, we don't have enough volume to continue looking for any buys or sells. So we have yet to wait for price to break below 1655 and then look for those sells coming down, or you hold on to a support here and then price pushes back up, eventually coming back into 1700 or so into these areas, maybe grab some more liquidity prior to continuing back down. But all of this is really dependent on the sentiment leading into CPI, PPI, and the FOMC meeting minutes. Come on to the 4-hour time frame, you see a heavy sell-off, and then the last couple of 4-hour candles, we start to see exhaustive moves. How do you know price is exhausting out? You start to see the bodies getting very small, and then also, nice wick rejections and stuff. So here, price is sitting into this 1675 and 1655 range, a lot of consolidation. We've had the same thing here, and I wouldn't be surprised if price did the same exact thing right now as well. So if you want to be looking for a trade opportunity, make sure that you're waiting for price to break above the 1655 area and then look for your potential buy opportunities. But if price does not break above this, you do not have any buy opportunities just yet. Don't look for a trade in between here. I would highly suggest against trading in this lower range. You can also adjust this zone here just to tighten it up a little bit, and that's pretty much what I would do as well. Just tighten it up, below these areas right around here. I would say encompass, this little fake out before price pulls back down, this little support area. Anything in between, it's a no trade range. Come on to the hourly, and then you start to see a little bit of consolidation. Price tries to push back down, but we're rejecting this and pulling back up into this area. So again, just stay out of it if you can, at least until tomorrow, when you start to see better economic data coming out, because rest of Asian session or even London session, we don't have too much coming out, right? So pull back here. And then as you can see, not too much coming out today. So I would say wait until tomorrow and then, wait for the economic data, wait for the market open, the market overlaps, that volume time, and then look for your trades. Let's take a look at GJ here. Same thing, if you don't have the quarterly, don't worry. That's why I'm showing you guys this. So you got the resistance at 165.3, 300 mark. I'm going to mark off the current quarterly low. You can't really see it. It's a little bit of a bottom wick, but hopefully you can see it here now. That's the area that I'm going to mark off. That's the area that we've rejected so far. So I want to see, can we continue breaking below this 16500 mark? If we can, then are we headed back down to come back into these support areas? Of course, we'll adjust this as we drop down to lower time frames. Let's come on to the monthly. So last month, that was the liquidity grab right here when the news came out about Bank of England's temporary bond purchases. We pulled back up into this area, closed like a doji. So again, broke the highs and lows, a lot of indecision in this candle here. And then this month so far, we've pushed back up in the beginning of the month, rejected right into that 165,300 and pulled back down, and we're sitting at this key area once again that we have been sitting in for the last couple of months. So this is why it's very important to not look for, massive sell opportunities or try to call bottoms here and look for buy opportunities or anything like that. It's actually better to just wait for price to create support here and establish a support and then look for any buys, or establish a resistance and then look for any sells. Drop down to the weekly. Last week, as you can see, we closed almost like a doji, very weak volume in the market so far. This week we gapped down, so that's where the candle closed last week. This is where we opened up. We made a little bit of a top wick and pulled back down. There's not a lot of volume, and tomorrow you might even see this pair giving you a little bit more volume when Bank of England governor speaks at the IMF. So this, again, tomorrow is going to be a very important day. If you can, I would highly suggest against, trading this. So if you can, just stay out of the market until the economic data comes out, the speech comes out, and then you have a better understanding of where's price headed. When you come onto the daily time frame, this is where you start to see the exact consolidation right here. So we're going to mark this off as 162,700. All of this is consolidation. If you can, just stay out of this until you see price establish a strong support here. What do I mean by that? I've said it a couple of times here already. What I mean by that is, let's show you some past examples. This was an established support here, and then the next candle gave you a little bit of a bottom wick and broke the highs and pushed back up. That's a potential buy opportunity. When you come back here, this is an established support. Price grabbed liquidity with this massive bottom wick rejection, grabbing liquidity from here, and then it closed bullish. The next candle, let me go ahead and remove this. The next candle gave you a nice bottom wick rejection right here, and then push back up. So when you drop down to lower time frames, you would have seen like some form of break and retest here. And then as it continued pushing up, you would target this area once again. This is another established support here, a bullish candle close and then a push back up. So here, when you're looking for any buy opportunities, what you want to see is this candle. Again, this is just a current daily candle. You still have some time here. Let's say it makes a bottom wick, flips back up bullish. You see how price had essentially left a top wick rejection here. This little wick rejection, which is a bearish rejection. Let's say price pushes back up bullish and then it breaks its own high, fills that wick, leaves another range, and then the following candle gives you a bottom wick rejection and then flips back up. That's your potential buy opportunity. So now price here has established the support. The next one is respecting those lows and then pushing back up, and maybe you can come back and target 165,300. So that's what I mean by, wait for an established support and then look for an entry. When you drop down to the 4-hour time frame, all of this is just consolidating. You don't have a trade opportunity here. So you wait for, again, an established support. You have a ton of examples here in the past that you can take a look at for established supports and continuation back up. And all you need to do is kind of mimic the same exact move. Now let's go ahead and move on to US30. Let's go on to the quarterly time frame here. I'm going to mark off the lows right here, 28,600. Top wick rejection of the current quarterly candle, 30,500. Let's go ahead and drop down to the monthly. So on the monthly, we can see how price has been giving you nice top wick rejections here, a nice break and retest right above this area, and we will 29,500. 29,500, so nice top wick rejections. That's the area that we've rejected and pulled back down into. So again, you're sitting at a pretty key level here once again with these wick rejections. and then price holding on to that area as support. If price can continue breaking below this, then we come back down and we target these areas. But if price does not continue breaking down, then you don't have continued sells here. So from a fundamental perspective, I'm looking more towards FOMC meeting minutes, PPI coming out, CPI coming out, and then looking at how price will be moving. Also, it's earning seasons, right? So you want to be watching out for those earning reports as well. And right now, for a lot of companies, we're not seeing a lot of an optimistic move there either. So when you're looking at the weekly time frame, price pushed up with a lot of bullish momentum back in 2020. Literally, the Fed stepped in, provided liquidity. We ended up consolidating out at some of these all-time highs. Price continued this bearish trend. We pulled back up to grab liquidity, and then another continued sell-off. Last week, we closed with a nice top wick rejection here, pulled back and closed below this 29,500 mark. This week, we already made a top wick, and it seems like we're flipping back down to continue bearish. So what I want to do is drop down to the daily, and I want to see some confirmations of those continued sells. So price push back up. Again, this was the entire rejection that essentially happened last week, where price held onto a resistance and pulled back down here. What I want to see is, can price continue breaking its own low, which is that, again, I don't know if you can see that nice bottom wick rejection here, but price breaks below this, and then you have those continued sell opportunities to come back down into 28,700. So let's just call that the 29,000 flat. So 29,000 flat, give price enough room to break below these wick rejections here to the left as well. And then you still got some pretty good movement that you can catch. Again, this is the daily time frame, so we're talking about some potential scalp opportunities. Come down to the 4-hour time frame, you start to see consolidation here, and then this little support area. So again, break below this, and you mimic this exact move coming back down into 28,600. Drop down to the hourly time frame. Once again, consolidation. So you just wait for 29,000 to be broken for any sells. And if you want to look for any buys, then you wait for 29,500 to be broken. You can catch scalps in between this range. But again, if you're someone who's struggling with understanding the limitations of your trade, I would just say wait for both of these levels to be broken. But if you're someone who's okay with the limitations of your trade, and then you wait for an established support down here at 29,000 flat, and then you look for those buys coming back up, first targeting 29,200, coming back up to 29,400, eventually leading up to 29,500. But if you're someone who's new to equities, someone who's still struggling with risk management, with trading psychology, all those things, haven't really figured out your strategy, just play it safe and wait for 29,500 to be broken or 29,000 to be broken. With that being said, I will catch you guys for the live session. I will post that on my YouTube community and also on Instagram when we're going to have the live session this week. But trade safe, everybody. As always, you guys have any questions, feel free to reach out to me on Instagram at SharmaFX. And other than that, have a great week, everyone. Again, make sure that you're trading when there's volume in the markets and you're not just trading in the middle of the session.